All right, good morning, everybody. Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you all become better traders. Today, we're going to be looking at a few things. Bitcoin's at a couple key levels here over the weekend and yesterday. I took a short. Basically, when we hit 2-week resistance, made a lot of money on that trade. And then last night, when we traded into the old 2-week support level right here, I took a long on this hourly candle right there. It was roughly like 4 o'clock or whatever. But as it traded down into this level, I went ahead and took a long. So basically, those two trades have already like done really good on the week. So, but if you are still interested in taking a trade, you can see right here you have daily resistance, and since you tag 2-week resistance on Bitcoin, you have bounced back to the downside. That's a pullback. It is common since we have had this slight uptrend here. If I look at it on the weekly on the line chart, you have broken out from the bear flag formation. We were looking for a bullish breakout on the weekly time frame based on the volume, but you have had some choppy days for the last 16, 18 days. Been very choppy, been very difficult to trade if you're not a professional. It's been very difficult to trade if you are a professional. All you got to do is listen to Bloomberg Live or CNBC or Fox Business, and you'll see just how difficult it is for them, as you got so many people that are still so very much not really understanding what the market is doing. It's basically because markets that are supposed to be correlated or inversely correlated are not, right? You should not have risk moving up while the DXY is on a very strong uptrend. Furthermore, you should not have Bitcoin moving up when dollar is in a very strong uptrend. It's a 3-week uptrend. 1, 2, 3. So we're starting a fresh, brand new week. Today is the 30th of May, which means tomorrow will be the monthly close. So I did have someone on Twitter say, so I guess selling May and go away was not a thing this year. All you got to do is pull up the daggone chart on the monthly, and you can see that this is a bearish month with a low that got all the way to 25,837 with a high of 29,981. So yeah, I mean, unless you get all the way up to monthly resistance and above it, you're going to close bearish on this month. So, I mean, that's a bearish May month. It is a sell in May, go away type of deal. However, I think you have found the bottom of the month. So, wherever this thing closes, that's going to be potential monthly support. So what I've done is I went out to the 2-week, because the 2-week shows an obvious clear range, right? Very clear. This candle is resistance. This was support until this candle broke down. Now we are testing resistance on the 2-week, but if you look over here, there are 5 days left on this candle. So this candle's closure is going to be important for future directional biases. Mr. J. Bradley in the chat or in the Discord hollering at me. All right, so moving on. Let me get back over here on the Bitcoin. So the short entry that I took on the Bitget platform was 282.16, 282.16. So that's right in down there. We'll go back to the hourly here. So it's like on this wick is when I got short. On the Bitget platform, it's just above this close. So it's really like right in there. And obviously I took profits here because this is where I expected price to pull back to. Now, since you have been bullish, or for the last couple days anyways, you've been bullish, 4 days in a row of bullish candles and then a breakout candle. A lot of people are going to change their bias to bullish. You haven't really broken out of the channel yet to the downside on the daily. But like I said, if I put a line chart on here and used a trend line, you will see that on the weekly you have broken out of the weekly bear flag or bull flag. So there it is, right? That is a bull flag, right? Whenever you're moving up in a trend and you pull back for several weeks or several days, it's the formation of a bull trend. As long as the flag, isn't longer than the pole, is when you get the breakout, it seems legit. So as long as we're not closing back under 2-week support, right, we're going to be looking for bullish moves to the upside. You're still up on the 21. You got the 200 week right in there. On the candles, you will definitely see wicks tested that both, not the 21, but it definitely tested the 200 simple. And look at that reaction. Now, this was the first reaction we got on it. This is a weekly chart, 1 week. So each candle represents 1 week worth of time. You tested it here, and then the very next week was a sell, right? Basically into weekly, old weekly support. Here's the breakdown. There's the retest of old weekly support. And then you sell off and close bearish. This week we open back up. We come back down. We retest that 200 simple, and boom, shakalaka to the upside we go. So there we are, right? Here is your US 100, absolutely ripping from the yearly open. Guys, I can't stress to you how important identifying trend is. You cannot look at what happened in the past and use that to basically tell you what your trend is. All you got to do if you're using TradingView is, I don't know if you can see this down here. Yep, you can. Use the year to date. Boom. That will show you what the trend is. Year to date, right? Year to date. That's the trend. This is 2023's trend so far. Nice and up. Basically, I was telling people back in this time that you need to stop being a seller, quit being a bear, and flip your bear caps around and become a bull. Remember? A lot of you do, because a lot of you were following me and listening to me back then, where everybody else was calling this a bear market bounce or a bear market rally. We were buyers. We were looking for the trend to change. Basically, that a low has been formed. In a lot of these cases, you are almost at all-time highs in some of the tech stocks. Now, while Apple and Microsoft only, they're both close to their all-time highs, they didn't get a very big gain based on the fact that it was only a 38% drop for Apple or something like that. So here's the all-time high on Apple. There's the yearly open. If you would have bought it, it was pretty much straight up. But since, Apple's such a big stock and has so many shares traded, it didn't really move as far as a lot of other things, right? 37%, which is still a nice return on investment. 2% is a nice return on investment, depending on your time frame. So, yeah, I don't know what's going on, but we've been all over the markets, all over them. So let's get all over today's action, right? So far, you have already made a move basically off of the daily resistance. So if you were going to be looking for a short, that is the area to look for it naturally. It is the open of the day for the New York sessions, or for the New York stock market, I should say. Boom, boom. So there you go. A couple people were discussing it, or one person was discussing it in the Discord. That the daily resistance was being tested. I'm going to use XXY's example here just to kind of show you guys what we go through. Right there, boom. I mean, pretty, right? Pretty. And he's got a little bit of divergence drawn up here, right, on the 5 minute. So that's what basically instructed him to take his short. Now, like I said, I'm not here to tell you how to trade. What I'm doing is showing you where to look and when to look for those entries. If you already have a strategy and it works, this will just help, right? It'll just help make you a little bit more accurate in where you take those entries and where you take those exits. And it's a beautiful thing, a beautiful, beautiful thing. Here we'll go. It looks like it was 5 o'clock. Where is my thing? There it is. My sniping tool, sniping tool, whatever. Right here. Yesterday, right there, 5:54 p.m. showing people right here. I took it on the Tether side of the platform, on the Bitget exchange, on the futures part of the platform. You have 3 different ways you can take trades. You can use USDT versus Bitcoin. You can use USDC versus Bitcoin, or you can use the Coin M futures, which is an inverse swap perpetual contract that allows you to use Bitcoin to trade Bitcoin. So it's a fantastic way to make money in the crypto markets. There is a link in the description for Bitget, and they are doing a thing right now with Trade Talk that if you deposit $300 using my link and my code in the description, XTSC, that is X-Ray Tango Sierra Charlie, deposit $300 and make 1 trade, you will get free access to the Discord. All right, so if you need to hit me up, you can hit me up on Telegram. If you did do that and you need a link to the Discord, you can find me on Telegram at Trade Talk. All right, that's me. Show me proof of your deposit, proof of your entry and all that stuff, and I will get you the link. Or you can go the old school route and just go through Patreon if you want to be a part of it, guys. It's, you know what I'm saying? There's nothing that's taught in there that isn't taught out here for free. But, you know, I'm not always live when there's trading opportunities that occur. And yeah, so there. My CAD Swiss trade isn't looking so good now. I took it last week. It was going to be a swing trade. I took it at support here, and although it was looking good during the London session, I was not awake. But once again, I am here telling you that if you are awake during the London session, it usually calls the high or low of day. And in this scenario, it called the high of day. All you had to do was wait for the freaking close and take the short. All right? It's easy, like literally. And if it's the opposite, if it's, 3 o'clock in the morning, it's heading lower, wait for that hourly to close and go long. You won't be right 100% of the freaking time, but you will be right more than you will be wrong. 1 trade, don't get stopped out and immediately take another trade and do all that garbage, right? You just take 1 shot at it and you'll figure it out. But you can see it's coming right back to my entry, so I'll probably close that one out. The Euro USD trade that I entered, I got stopped out last night. Here it is. What is that? 3 o'clock. Boom. Had you just waited for the 3 o'clock candle to close, you could have got long. You just stop against that low right there, and you'd be up on the day nicely. So the London session has absolutely wrecked New York for Forex today. Once again, I'm going to use another person in the Discord's example of how good they are doing. I mean, Jay Bradley, he's been with me. He was the first person, the very first one to join the Discord group. And he gets up at the New York session or at the London session, which is early for us. That means he wakes up at 2, 3 o'clock in the morning and looks for entries. And right there you go. That's a nice, better than 2-to-1 risk to reward. I don't know why he's using a white screen. Just kidding, man. Just kidding. All right. So, yeah, Bitcoin, it looks like the trade has already taken place. I'm long from here and I'm short from here, but one's on the Coin M futures platform, or the Coin M, which is with the Bitcoin. That's how I stack sats, if you will. I make profitable trades using Bitcoin. And then when the account gets up to a certain size, I just pull it all out of the exchange and put it on cold storage and then start all over again and keep doing that. So that's my main account, if you will. And then the USDT and USDC sides, I just occasionally play around with stuff. So I took the long here on it. So I do want to take profits on it. Even though the market has opened, I am expecting a pullback on the NASDAQ. Bitcoin has not been following the NASDAQ for some time, but it is overbought. All right, that's on the daily, the 3-day, and the weekly. You're almost there on the 2-week. So, I mean, it's overbought. It's been going straight up for 1, 2, 3, 4, 5, 6 weeks. I would not be looking to be a buyer of the NASDAQ right now. It is definitely bullish. It's been bullish for a long time, and it is a good far piece away from the 21 exponential. So, I mean, your downtrend is done. It was over on January the 1st. January the 1st, you started a brand new trend. Now, people are going to look at this and they're going to still say this is just a bear market pullback, but they've been saying that from down here. They were shorting. They were probably shorting here. If they shorted there, good. They made a little bit of money. They shorted here. You can see, right? Going against the direction of the trend is never advised. Never advised. And my future legends know how to identify trend. They know how to do it. You do it, and you do it good. But like I said, on the line chart, you've broken out. But if I put this on the wicks, you did not. You have not, right? You tried to there for a little bit, but you didn't. If I use just the bear market or just the bearish candle opens, you have broken out. All right. Now, here's the thing. Here's the important thing. When do we know that the uptrend has never stopped, right? This is just considered a bull flag. So it's a pullback in what is already an up market, right? So you got to get all the way up here. You got to get above 29,253, and you got to close a weekly candle above that. That is the last weekly bullish close since the downtrend. So what I'm saying is you've not been able to close a bullish candle above anything since this candle was put in. All right. So you can clearly see that as of right now, it's still shorts can still be taken. What we need for this weekly candle to do is close above this candle. It needs to close above it, so that way we can say that we do have one weekly candle that closed above a bullish candle. But up there is where the true supply is. Up there is where everything is not so great. One could argue that as long as you're trading under this candle's open, which we currently are, if you look at my dotted lines, that's going to be considered supply on the weekly. All right, on the weekly. So, based on that swing right there, if I pull this up over here, you're going to see that you got a ways to go before you can be considered breaking out of this channel. And it is a channel. Or also a bull flag. I mean, because that's basically what bull flags are, right? Yeah. So there we are, right? There we are. You're still bullish on the day. Yesterday was a vacation, so we always expect small ranges to be played out whenever the New York session or, whenever the U.S. markets are closed. We typically don't expect Bitcoin to make big moves, although it can because of very low liquidity. But this is a decent looking candle, in my opinion. So on the daily, you can see you can go much lower before we'd be looking for shorts again. So when we were down here, we were looking for shorts. Obviously, those shorts did not play out, right? So it is a tricky time now because now you have switched from being bearish, where the bears are in control of price. Now you are above the 50 spot on the RSI. That indicates that the bulls are now in control of price. So I would be looking to take entries at either the old 2-week support or at daily support. Mind you, as long as you're not closing hourly candles below that and getting downside continuation. Let me close this long trade out real quick. Because I do want to keep some of the gains that were made. Because I did not take profits on it like an idiot. Let's see if we can get them at least back up to 27,826. I have to go above price because it's a long entry. So I have to set my take profit above current price because it's a long entry. If it's a short entry and you're looking to take profits, you got to set your take profit below price. You got to get filled on a down tick if you're short. You got to get filled on an up tick if you're long. So we'll see how that plays out. I mean, it's like I said, it's on the tether side, so it's not a big deal. The stop loss is setting at break even. Let's move it up a little bit further than break even, so that way we don't lose any money on this, on the fees. I don't like the fact that it started out bullish at the beginning of the week. I never really liked that, but today's Tuesday, and we know that sometimes on the weekly ranges, those weekly highs can be set in, or the weekly lows can be set as, you know, at Tuesday or even into Wednesday. So we could be either seeing a low already made or a high already made. All right. Since we have last week's bullish engulfing in a bull trend, you are up, you are above the 50, you are above the 21. Therefore, your trend is up. A bullish engulfing at support is a good long signal. So wherever this candle pulls back to, I don't know where it will, right? But we know of areas that we will look to be operators at. The first level or price is going to be 27,592. That is old 2-week support, right? That is old 2-week support. The 2-week resistance that I am looking at on the Coinbase exchange is 28,474, spot 53. And then 2-week support, not the old 2-week support, but the 2-week support is 26,752, spot 65. You can find that easily just by pulling up the 2-week chart, and that's resistance, that's support. This is old support. So this was a legit breakdown. If you cannot close this 2-week candle above resistance, then one is going to have to say that this looks like you're going to see downside continuation. Another thing of importance that we can't get too bullish here is because we did not take out that swing low. Now we are trading a fair distance away from that swing low, but if you do not close above this, then the next 2-week session, we will probably be looking for shorts targeting that swing low. That swing low does not have to be taken out in order for price to move up. All right. It's just something that I do typically look for when I am analyzing price. So right here it is. There is that nasty swing low, right? That's that big bearish candle on the weekly or the 2-week. Boom. Set in that low. Then we traded sideways for many, many days. Then we had a move lower. You did liquidate this swing low and this swing low, but you did not take out that swing low. And you can see how close you got to it. I was literally expecting price to trade down there on that day, and it did not. That price, that wick low is 25,819. Here, let me make sure. Yeah, no, it's 25,810. Sorry, 25,810 exactly. Did not take it out, and then you got a bullish bounce. So a lot of people were probably short. All right, they were shorting the top of the range. So price is now moving up, looking for supply. We'll see what happens. We'll see what happens. But your daily resistance is 28,070. that is where you would typically look for short entries. All right. That is where you would typically look for short entries. I did get filled on 70% of the profits on that long position as this ticked up. I was just using this candle's low. Let me get rid of the 21 so you can see it to believe it. I was using this candle's wick low right there. I just wanted to get an uptick to that, and I took out the long position. So doesn't look like a very good trade, right? From this line to here as a long. But as far as what I was risking, it was a nice trade. It was a nice trade. So I don't complain the fact that I didn't take profits at the very high, right? I didn't get in I didn't take it up there. Obviously, like I said, I was asleep up there. But taking profits here, that's a 3.75 to 1 risk to reward. Not bad. Not bad. Ended up being about 30%. We're good with 30%. And like I said, I made money on that to the downside too. So good, good, good. We're doing good. Everybody's quiet this morning. What's up, my few ledges? Why are you not talking? What's going on, everybody? I hope everybody's having a fantastic Tuesday morning. I hope everybody had a fantastic Memorial Day. Those of you that are U.S. citizens, we did. We had steak. It was good. Yeah. So what if you're looking for longs? Trade talk. Well, if you're looking for longs, you got to find the intraday support. That's going to be right here. This is your open on the day. And it is also support right there. Boom. Right? That's your daily open. So if you get under 27,744, then you will be red on the day, as that is the opening price right there for the daily range. I will show you. There you go. So on the open, you made this is your low of day. This is your high of day. So very small range day as far as a daily candle is concerned. So your intraday support, 27,744. You don't want to see 2-hour closures under 27,735. That would be the area at which I would look to get long if I was thinking today was going to end up being a bullish day. We did take out Sunday's high. Sunday was a very big day. Why was Sunday such a big day? It's a weekend. Like, look at Saturday's range. Very small, very small. So why did we get such a big day on Sunday? Well, I will tell you. That's because the U.S. was in talking between itself or arguing between itself as far as the debt ceiling goes. Basically, people were saying that if we don't raise the debt ceiling, then the U.S. will default on all its obligations. On this day here, an agreement was made. Now, it's not passed everything it needs to pass to be in effect law, but just because they made an agreement, that is, in my opinion, why Bitcoin got such a big boost on a weekend day, Sunday. So it is possible that price pulls back down into here to recheck that. All right. But we'll see. Let's go look at any gaps that left. There you go. So a lot of people are going to be looking all the way down as low as 27,110-ish to see gap fillage on the CMEs, right? So the fact that on the CMEs you had a gap here, you closed that gap, then you liquidated that swing low, then price got that bounce based on that news. It still doesn't look bullish, right? Because you're still in a downtrend, if you will, on the near term. For 6 weeks, you've been in a downtrend, but it's still in line with the move up. There's still the big gap down there, and there's still the big gap up there. So, like I said at the beginning of the year, in my opinion, price will probably more or less trade back and forth in this range, this overall range. You're in the middle of where the two gaps are, not including the new gap here. The new gap will be filled more than likely. But I don't know when, right? Will it be filled today, tomorrow? I don't know, but ultimately it will get filled, in my opinion. And so will this gap, and so will this gap. 2024 is when we're going to be really expecting the bull market to really start to take off. Hopefully by that time, inflation will be, it probably still won't be at 2%. I think the Fed is forecasting that they won't hit their 2% inflation target until 2025. So we'll see. We're at 4.9 right now. We do get the next CPI print on the same day that we get the FOMC, which is going to be madness. This Friday, we will have FOMC, as it is the beginning of a new month. The first Friday of every month is when you get FOMC. The first Friday of every month. FOMC. That is the jobs data. What the Fed is looking for is they want the unemployment rate to start ticking up, as that would go in line with their fixing inflation. I think if you just look at inflation and see that it is coming down, I mean, at 4.9% is still hot, but it's a lot better than 9.1%, right? And that swing high was made in June of 2022. So pretty much mid-year. That's why we had a bear market in 2022. So I don't think that you have to worry about another advance in inflation. I think that what they have done is probably going to be more than sufficient to bring the inflation rate down. And remember, we've been saying this since the low was put in on Bitcoin, that as long as inflation continues to trend lower, we would look for bullish prices. We think the markets would basically become bullish again based on the fact that inflation has been fixed. Not fixed, but is in the process of being fixed. And I've told everybody you cannot wait until inflation gets fixed or you will miss the freaking move. All right? You will miss the move. A lot of people are late because they're still on the sidelines. They missed the Nvidia madness. They missed, Apple, Microsoft, Facebook, a lot of other tech stocks. They missed it because they were on the sidelines based on their, long-term macro stuff. Just watch price. Price will tell you what's going on, right? Price will tell you what's going on. All right, so that's going to be daily support. This was the support that I took the trade based off of. We now have a higher daily support. So let's see if it can hold there before I close the trade out. As it does appear to be kind of sort of holding. But you're bearish on the day by 0.21%. Good morning from Shitterton, England. That sounds like a fake place, Victor, but I'm not going to say it's not. I'm going to Google it and see if you are, in fact, it is a real place. Nice. Shire County, Dorset. in the UK, Shitterton. You never know if you're being rickrolled or not. Good afternoon. Been in London for a few days. Can we look at FX, please, Heath? Yeah, we will. We have been actually. We looked at Euro. The Euro's at the yearly open, so we definitely think that, we're going to get a bounce here. We were talking about this last week, and we talked about it on the members only live stream. In order to get to the members only live stream, it's the second tier as a YouTube membership. I think it's $5. I do a live stream every week on Sunday at 11 a.m. We discuss what we're looking for the week to come. Didn't have a lot to say this week, obviously, because things were sideways for so long, but we were looking for a bounce to happen at least here, based on the fact that it is yearly opening. That is such a big level. It's been trading here for a couple days. So euro strength right now is what's bringing the dollar down. Trust me, it is not dollar weakness. All right, it is euro strength. You're getting a bounce on the euro based on the technical level that you are at. So since the euro is such a big portion of the DXY basket, the fact that traders are indeed looking to buy here. Why? Well, because it is in an uptrend. You have not made a lower low on the year, but you have made a higher high on the year. So this is the open of the year. You set a yearly high, then you went down, you set a fresh, no, you didn't. So you didn't even make a fresh yearly low here. So there's your yearly open. You went down, you set the yearly low. The yearly low is setting right there. So although it's not a nice trend, it is still a trend. Right? It is still a trend, a yearly trend. You made a higher high on the year, then you made a higher low on the year, then you made a higher high on the year. So it is an ugly trend. And there really is no way that you could put a trend line on it. It's just that ugly. So it's more of an ascending channel than a trend. But nevertheless, it being that level, people will look to buy. So like I said, the reason that you're seeing dollar weakness today is based on the fact that the euro is up, and it's not up big. Now we can go look at the currency futures and we can see what's what. The British pound is the strongest one on the day. The DXY is neutral on the day. Aussie's bearish, New Zealand is bearish. So even though the dollar is neutral on the day, Aussie and New Zealand are still bearish. So tell me that the yearly open isn't a big level. Boom, check, reversed. Boom, check, reversed. Breaking down. So you do have what? A downtrend on the Australian dollar in 2023. There's your yearly high. There was your yearly low. Higher lows. Lower lows, lower highs, and then you got a lower low. So you are trending to the downside on the Aussie dollar. So I would wait for a decent sized pullback before I'd start to look for long entries. So we'll go here. This is old weekly support. So I don't know if you'll get a tag back to old weekly support or not, but that's probably around the level I would look for potential short entries. And then the next place would be 66585, as that would be your last weekly res. All right. Yeah, so, but it could obviously trade all the way up there. I don't see it happening. It just depends on how strong the trend is. There are your 2-week ranges there. You can see it is obviously trending down pretty strong. Pretty strong. So, if you look at the yearly candle, it's going to look like that. Still trading inside of last year's candle, but we haven't even made it to the midpoint of the year yet. June is obviously the midpoint of the year. And then, of course, there's your yearly open. So there's Aussie dollar. You will be looking for shorts on that until the trend changes, at least on the daily. And you know what we use to identify the daily trend change. It's the 50 on the RSI or the daily 21. And here is New Zealand looking almost the same. For some reason, I do not have the yearly open tacked on this chart. And that is it right there. So yearly high down, fresh yearly lows. Not looking so good on those two assets. And these two assets are literally considered risk on assets. So during a bullish market phase for the whole market, you know, you would expect this thing to be trending up in 2023. But, you know, yeah, it's not, right? It's not. It's trending down again. So 2022 was a downtrending year. You got a nice bounce. So far, 2023, you're a down year as well. All right, so it's not looking great. You would want to see these two assets bullish if the markets were happy and everybody was bullish. All right, and then you would want to see these assets, Swiss franc and the Japanese yen, bearish. Once again, I do not have the yearly opening range situated. You would want to see these assets down on the year. So there's still very much a lot of risk out there, guys. That's why you got a lot of macro people that are saying, you know, they're still bearish because they still have bearish signals. Now, the Japanese yen, not so much, right? And this is what's definitely killing my USD short. Absolutely killing it. Because it's just continuing to trend lower and lower and lower every single day. Not good. Canadian dollar up just a tad on the day. There's your yearly opening there. So you've been pretty much trading sideways on this asset all year. Right? That's kind of what I expected out of Bitcoin for the entire year of 2023. So you know, as far as going up or down on Bitcoin, nobody can say for certainty, right? And this one is still there. This one's still up on the year. The pound should be down a lot more than it is. So it is not lagging as much, or it is not as weak as the euro. But nevertheless, I do have a short on the pound. So, and I'm going to keep it open. That's why it's bouncing. It's bouncing at the 2017 yearly opening range. Why do I not have 18 in there or 20 or any of the others? I guess because we're in the range. I wanted to see what was going on. So we're getting a bounce here, but this is probably going to be an opportunistic time to look for a potential short entry on the pound. That is, of course, if you expect the dollar to continue to move up. But remember, the dollar is only moving down right now because of euro strength, and euro strength is only happening today based on that. So if I was going to be looking for a short, I would not short the euro. Why? Because you're at the yearly opening range. I would be looking to short the pound. The pound is up off of the yearly open. It's bouncing at an old yearly opening range. Remember, your higher time frame open and closes will definitely act as support and resistance as price moves through them, right? So we do keep an eye on these levels. That you're getting a bounce there. All right. You're getting a bounce there. But you are clearly still bullish on the year. Remember, you're still bullish on the year, but you're losing that on the monthly, and you also got the 21 right there. So here's the question. The way the pound is situated looks similar to Bitcoin, doesn't it? Right? Last couple of weeks, Bitcoin's been trading lower. I doubt the 200 week is, yeah, you're under the 200 week on the pound, so forget about that. We don't need that anymore. We don't need that anymore because we have traded away. But boom, boom, right? So if you are looking for near-term shorts, thinking that you are going to test the yearly open because the DXY has already busted up above its yearly open. However, it isn't far above it, right? Remember, it looks good. That looks like a very good weekly close above the yearly opening range. So it does look like the dollar is trying to do some things here. But you're in a range. I mean, that's the open. There was the low of year, then you made a high of year, then you made a fresh low on the year. Now you're pushing up again. See? Trading inside of the yearly range. Yearly low, yearly high. Boom, boom. Yearly open. Boom. So if it fails here, this is going to be what's called a bull trap. And since it was such a good, strong close on the weekly, it could take a couple weeks before you actually break back down. And in that case, you would not be looking for shorts on the pound. And we would be expecting the Bitcoin to continue higher. So that's your main currency pairs there. There's Aussie Yen. Aussie Yen is the reason Aussie Yen is looking like it's not so bearish is simply based on Japanese Yen weakness. Japanese Yen weakness. We know that Aussie is weak too, but the Japanese Yen is weaker because Aussie is gaining. It is gaining against the Yen. So the Yen is the weakest pair. It's struggling at a multi-week resistance. A multi-week resistance. Here's your yearly open. Sideways. Oil, bearish on the year. Made a fresh yearly low here. Made a fresh yearly low here, and it looks like it's trying to go lower. A lot of people, including me, were expecting bullish prices in 2023 on oil. So that was one that I was wrong on. We shorted it back over here, but I haven't been playing with oil since it's been in this range. I actually thought we would see downside continuation here, and then up she goes, back down she went. So this move right here, this swing low to that swing high was nothing more than a liquidation event. Liquidated those lows, liquidated this high. Down it went. So the highest weekly high right there. So the next weekly high is all the way up there. That's why it rolled over there. That's why we took short here, right? Same reason. But you could have took a short then too, but I wasn't paying attention to it. It's hard for me to pay attention to every single asset class. You think that I would be able to, since I'm sitting here every single day, I'd be able to keep a track of every asset in the world. Quietly learning, awesome. I bet some Taliban are saying a little Memorial Day prayer. Can I look at Ethereum? Yes, I can. Obviously, Ethereum is going to trade similar to Bitcoin. All right. Still bullish on the year, on the week. This is your yearly open. On the weekly, you're still looking good, right? You got a nice little uptrend going there. You did break out above resistance, right? So that's what we want to see Bitcoin do. Break out above a weekly resistance that it has yet to done. It has not done it yet, right? So we'll see here, right? We'll see here. Is this going to be Ethereum's low on the week? I don't know. It's at daily res. I mean, it could be a short. You could look to short it back down to yesterday's low, right? That's all we do. We trade in the range. We get the ranges and then we trade inside of those ranges. Intraday, it's bullish. It's pushed up to resistance, daily resistance, which is at 1909. And so far for the last 3 hours, you've been failing, but you have not really done much of anything. It's a small range day. Here's your daily open right there. So Ethereum trading well above the daily open. That would be my target if I was going to look to short it. 1891. But, well, I guess you're kind of just above 1900. 1900 is a big figure number. And a lot of people will take positions based on that fact alone, whether they're long or short. And they don't necessarily have to be short either. It could just be people that got long at the beginning of the year, like I did, taking profits. Because, I mean, it's almost a $1,000 gain on your position. Not bad. Not bad. Right? So we'll see if it can. Has it broken out of its downtrend? Yeah, it has, but it has to maintain it, right? It has to maintain it. So we'll see if it does in the coming days and weeks. Next area of potential resistance all the way up there, 1994-ish. Bitcoin is still trading. So if you were looking for a day trade on Ethereum, right now, the only trade would be to look for shorts at daily resistance. But since the market has opened and you're not getting that really big move, I mean, you did get some volatility on the open. Pretty big 5-minute candle there. Pretty good drop. Pretty big 5-minute candle there. And then another big drop 5-minute candle. So you are getting some volatility, but that volatility is going to lighten up depending on, or as long as we don't get any bearish news today, any bearish random news that pops up. So intraday support. Let's see. Intraday support should be above the open. If it's going to continue to be a bullish day, I would be potentially looking for longs at 1898. You can't look for longs until you tag that level. And there's nothing that says that you will tag that level. That's just intraday support. Intraday support and resistances are not as strong as daily support and resistances. All right? Just keep that in mind. Price can trade through it and then boom, break right back above it. But if I was going to be looking for shorts, the short entry would be 1909. And I would mark that against today's highs, not yesterday's high. Today's high is 1917.61. So you should have already taken the entry. Yeah, it would have been hard to take the entry with that much garbage above it, right? But that's your entry right in there. Unless you knew it was going to fail, right? Then you could have looked to short it up here, but you weren't shorting it on anything. Well, yeah, you could have. You could have shorted it off of hourly res or off of this Heath level right there. It's just above the daily resistance. But if you had, if you had a short-sighted daily bias, you could be like, here's daily res. It failed here. I'm looking at this as going to be a bull trap, and I'm going to short it. You could have shorted it at the resistance, intraday resistance test, which is also supply. So that's, you could have traded that for sure. Bitcoin did the same thing, literally. But Bitcoin actually didn't tag the daily resistance. But that is your last up close hourly bullish candle, so that the open of that candle is considered supply. Right? But we're looking for Bitcoin to hold potential support at 27,735. That's 2-hour support, intraday support. That looks like a bad candle, so it does look like you would see downside continuation, but we'll see if it gets it or not. They're not printing any divergence on the hourly. Nope. But you did on the 5-minute. That's what prompted XXY to take that short. There. So he was looking at it like intraday was losing momentum. And that's where he was looking to take profits based on the RSI, I would assume. So small trade, but he was risking very little. So he could have had it levered up. He could have made a lot of money on that trade. Remember, it doesn't matter how small the range is. It matters where you pick your spots. If you pick your spots and you can get the smallest stop loss possible, that means you can up your position size and make a nice chunk of change off of just a couple minutes. But you have to eat the stop. If you eat the stop, you have to eat it. Thoughts on BKKT? It's an undervalued powerhouse in the fintech sector. It is backed by the New York Stock Exchange ownership and has an impressive price targets surpassing $30. BKKT. Backed holdings. Well, it has very little liquidity intraday. One could argue that it is in bullish territory. There's so many levels within this junk right here. Yeah, up to $30 would be an impressive move, man. I don't know why you would call it an undervalued powerhouse. It's clearly not shown any power since October of 2021. But you're at a longer term support, right there. Let me get it on there. So you remember, if your support is broken on the higher time frames, which it was here, if the very next candle takes out the candle's high, then that candle's a trap and you revert back to the old support. And look there. That would have been the place to be a buyer. It does look like it's running out of momentum already at resistance though. So your support is 119, your resistance is 147. So you can't get long here. Now, if you're buying this without leverage, if you're buying this just because somebody has given it a price target surpassing $30, who, may I ask, Rashad, gave it that price target? I wonder who gave it that target. Because you can't listen to everybody, right? But I would say this, it is losing momentum to the downside, but I mean, this asset was priced at 50, $60 at one point in time years ago. And 4 years it's been rolling over. Since 2021, you have been in a consistent downtrend. And I mean big time. So this is a descending wedge. It is looked at for bullish breakout potential, but like the highest I would expect it to go would be $2.05. Now, like I said, if you just buy it with, $1,000, then you could put a stop loss at zero. You would lose all of your money if it went to zero, right? But as long as you don't use leverage, then you could potentially be a buyer here and just sit on it and hold it, and hopefully it breaks out and gets bullish momentum. But the chart would disagree with whoever gave it that. And you are correct. That is an impressive price target. $30? Yeah. That's your yearly opening range. Right there. So at the yearly open, it had a nice spike. A nice spike. 127% move to the upside, and obviously it's been faded since. Now, like I said, it is a descending wedge, and typically people look for those patterns to be bullish. They look for a bullish breakout, but your bounces are getting smaller. But it is a descending wedge. So, yeah, I figure ultimately it'll get to the point to where some people will think that it does indeed have enough value at that price, and then I just don't like these nasty spikes. Like that was a 100% candle, and then the next day you gap down some massive 15%. So I mean it's volatile. Big spike there, but it was ultimately sold off again. It tried to break out up there, could not. So for now, this is what I would consider the range, but I would use that support candle down there. I would definitely keep that as support because it is. It's trying to maintain above the yearly open. So look to be a buyer around 124-ish, 119-ish if you're going to buy it and hold it. All right. Japan's lost decades. Yeah, it has. Consumer confidence today 102, higher than expected at 99.1. That's probably why we're seeing downside on. Well, like I said, you're probably going to see downside on tech based on the fact that it's completely overbought. Like Nvidia is so overbought, it's not even funny. So I would expect a pullback of sorts on some things, and others we'll see, right? So looking for an intraday trade at that support, I wouldn't take the entry if you close a 2-hour candle below it. What was I looking for? Nvidia. Yeah, I mean, this thing's up 173%. Can anybody say overbought? It's almost more overbought than it ever has been. So it got massively overbought back in July 2016. It's almost as bad as that, right? Now it can stay, it's squeezing shorts is what it's doing. Because like I said, people were still expecting this to be a bear market. Like when this bounced here, they were expecting it to continue lower. They were expecting an '08 style crash. Now for some assets, they were off more than the '08 crash, right? Your S&P 500 didn't drop 80% in '08. This thing dropped 68%. So it dropped worse than the '08 collapse. This is when the squeeze started, right here. Right there, when you broke above this weekly high. And then it has been squeezing ever since. So would I be a buyer of Nvidia at 408? No, you should have been a buyer at 148. That's when I was telling you guys to be a buyer. You can go back and look at my older videos. I mean, I was like almost screaming from the rooftop on these assets that are off, assets that you know make money, good assets. Nvidia, Microsoft, Intel, to be fair, hasn't for some reason got that bounce yet, but if the markets turn around, it will. So in my opinion, Intel is still an opportunity, right? You're still trading at the yearly opening range. So yeah, it's this thing is probably getting ready to rip to the upside as the money comes out of Nvidia, as the profit target, or as the profits start to come out of Nvidia. They may rotate that capital into Intel because Intel is also a good product, right? So this will eventually start to go. In my opinion, Intel is one of the favorites right now to look at. Goog off its yearly opening range. I mean, I was telling people, you guys, you got to start looking, be a buyer, but nobody could. Why? Because of all the naysayers, all the bears out there were talking about '08. This is going to be a '08 style. This is going to be bad. 57% off on Goog. Apple didn't really collapse that bad from its all-time highs. Apple is a strong freaking stock. That's all you can say about it. 31% to its all-time low. Or not all-time lows, but to the bear market lows. So, yeah. Yeah. It was time to be a buyer. Nvidia. Netflix. I was telling people to buy Netflix when it was 80% off. Almost 80%. Like, that's when you want to buy these things. They make money, right? These are the high flyers. These are the soarers. Like, that's when you should have been a buyer down here. Now people are wanting to buy, and some of the things they're wanting to buy is, if you're going to look to be a buyer for tech stocks, look for ones that are close. Like Intel is my favorite. I don't know why. Obviously, it's dragging, so investors aren't liking Intel as much as they are liking Nvidia right now. Because I mean, basically, the only reason any tech stocks are flying is on the AI stuff, but I mean, there's 155% worth of return inside of Intel for it to return back to its all-time highs. And eventually it will. Well, no, that's not its all-time highs. So its all-time highs was back here in 01. Huh. So maybe Intel is different. Maybe it's got inside problems or something, but it's still cheap. It's a cheap stock. It's $27. And on its lows, it was off 64%. That's a good deal. People were still looking for an '08 collapse, right? So they weren't thinking about buying it down here. They were still bears. No, we were looking for buying opportunities. Riot was the one to buy. Riot moved up freaking 300% almost from the yearly open. 431. Well, no, I screwed that up. Yeah, 300% to the high. So probably should have bought Riot instead of Bitcoin at the yearly open, huh? And I mean on the day. On the day it opened, it was bearish. Had a nice push up. The next day, boom. Yeah. I should have bought it. I didn't buy Riot. I bought Bitcoin. But knowing what I know now, I wish I would have bought Riot. But obviously, to get back to prices to nah. I just don't see it, right? But I mean, if Bitcoin gets back to its all-time highs, then potentially Riot would too. But I'm not expecting Bitcoin to get back to all-time highs until 2025-ish. And that means we're going to have there's going to have to be some regulatory action and all kinds of stuff to get US investors back into Bitcoin. See, you got to think, why is the asset cheap? It's because of all the selling. It's all the selling. Everybody's sold. This is an asset, I guess, that you could trade instead of trading Bitcoin. But it also, it beat Bitcoin in gains for the year since the yearly opening, but it also beats Bitcoin in drops, right? Like that was a 30% drop. Freaking Palantir is soaring. Whereas on Bitcoin, it was a 15% drop. So, yeah, so you just got to be careful. Your risk is going to be. Let's go back and look at Palantir real quick. What is going on there? Once again, buy it at the yearly open. And you'd be up nice. You'd be up 100%. We were talking about it. So you're welcome, Michelle. Can you take a look at Mara, Riot, and MicroStrategy? Yeah. We did just look at Riot. Let's go look at Mara. Mara did not get as good of a move off of its yearly open as say Riot did, but it still did pretty good. 258%. So yeah. We have I think that's weekly support, and it is, right? It looks like a bull flag to me. But if you break down below 893, you could have bought it last week. I mean, you got a perfect test of it. And this line was drawn up before we talked about it. So that means 6 weeks ago or whatever, back in April, I drew this line for somebody. And it's literally been holding as support ever since. 893. So until you get a weekly closure below that, the next area to be a buyer on tomorrow would be 796. As long as this thing holds to the upside here, if Bitcoin starts to rip, this will too, right? This will too. But the thing is we need Bitcoin to rip before these things will rip. These things like track kind of the price of Bitcoin, if you will. Or they still trade on their own merit, though. Obviously, investors bought the yearly open. They bought the pullback. This was support right there. You can see that they bought it, right? That looks like a legit breakdown. It's breaking down below support. But then the very next week, boom, up. Right? You got to be careful. Traps exist. But if you lose 964, I'm sorry, if you lose 893, I'd be looking at 798. That's the next area of support, and then obviously the next area would be 594. Hopefully it don't get down there. Hopefully it trades sideways but stays well up off the yearly open. It looks good on the weekly. It looks like it's getting ready to go. Even on the daily, it looks like it's getting ready to go. But every time it goes, it's met with heavy seller pressure. And it's people taking profits from the yearly open, right? And it's also new short sellers. So we'll see how it plays out. But as long as Bitcoin is structured bullish, I like this to the upside as well. And since MicroStrategy has so much Bitcoin on their balance sheet, they trade almost like Bitcoin as well. Once again, from the yearly opening to the highs was well over 100% in returns for 2023. So like a lot of investors for 2023 should already be done. Literally. Like there's so many assets that are up from the yearly opening range in the tech sector and Bitcoin and all of that literally you could have made your nut already and be done for the rest of the year. Take profits and then roll those profits into safe money. Your yields are still very freaking high. That's probably why we're seeing bonds grow also. The yields get back up because people are generating profits on all those good trades and they're rolling it into your closer near term. Look at this freaking thing trading like a shitcoin. But this is, to me, I mean, this thing is strongly correlated with the Fed. Strongly correlated with the Fed. Here's your Fed funds. All right, we already know that they're going to hike 0.25% on June. I mean, the 1 month Treasury yield is telling you that they're going to hike at least 25. See, this is the market pricing in a hike, right? The market was pricing in the rate hike. April, and then May. So for all of this month, they're literally pricing in the fact that June is going to be a hike. But if you just compare this 1 month government bond yield to the Fed fund rate, I mean, yeah. That's pretty correlated. You don't get much more correlated than that. Over here is where you're at on the Fed funds, 4.87%. Over here, you're at 5.29%. So they're looking for a hike. Like I said, it could literally be that. People taking all their profits from all the money they made on the high flyers, and they're putting their money in good money, guaranteed money. That's sector rotation. Finding out where they're going to roll into next is difficult, but you can do it. It can be done. Hourly support is still holding, or this support. Now, hopefully it does, but Canadian dollar is. Oh, I need to get rid of the Fed fund rate. The Canadian dollar itself relies on oil, or trades a lot like oil. I mean, you can clearly see it's down on the year. So why was I even looking for a bullish entry? I don't know. I can't tell you. Definitely not bullish. Sometimes I try to pick the bottom like retail. I should probably close this trade. You know what I'll do? I'll wait for a push up to the weekly high. If we get it, take profits and then look for a short. And then again, that move already happened. It pretty much happened today. Oh, we'll watch. Oh, the reason I took the short is because we shorted it here. Remember? We shorted it here and then it came back up to our position. So I was like, well, maybe this thing is bottomed out. I mean, the closer you get to June, yeah, it might have bottomed out, right? It could end up closing as a doji on the year or something. I think that's what I was thinking, but we'll see what happens with it. MicroStrategy, I don't remember if I looked at that or not. It's up good on the year. I mean, it's pretty correlated with Bitcoin. So it's in the same wedge formation, but it's up at resistance based on the, the channel, if you will, that it appears to be in. So I can't advise you to buy it here. If you get down to here, I could, you could see. I don't know why that line is there. Literally nothing. There's all monthly resistance. Let's see where that looks. I would probably look for around 280-ish. Right in here, I think I would rather 290, 235 or something like that. But then again, it could just break out. This is a weekly time frame. You're testing the weekly open now, but the weekly open is literally today's candle because it was a 3-day weekend. So your weekly candle is today's candle. So Bitcoin is pushing lower. Bitcoin pushing right back down to that support. So I'm about to get stopped out of that long entry. There it goes. I just got stopped out of that long entry. All right. So yeah, it looks like this short was good. You're under the open. You're bearish on the day. So maybe it wants to take out yesterday's low. Maybe see how it reacts at yesterday's low. Yesterday's low tagged that hourly support perfection. Look at that. There is a gap to fill on the CME. So maybe it fills that gap. Maybe it don't. Maybe it just comes to around there and then goes back up and comes back to fill it later. We'll see. The short is looking better. To be honest with you, I wanted the short trade to work better because it's a lot more money than what was on the tether side. So the fact that we're back down there, look at it, at my P&L is much better, right? Much better. And it almost got to my short. Because I had already taken profits on the short and I moved my stop to better than break even. And it damn near pushed up to it. But I had it setting just above daily res. For U.S. investors, U.S. guys, because Bitget doesn't take U.S. And I am partnered with Bitget, but my old buddy from Bitget hit me up the other day, and I haven't fixed it yet, but I will have a link for you to go to BitTrue. I think someone else said Mexi is taking U.S. citizens, but I trust this guy. You know what I mean? And he's at BitTrue. I'm gonna get a link for that. They're still taking U.S. citizens, but it says the same thing that Bitget said right before Bitget stopped taking U.S. citizens. Right? It says that they won't take you if you look at the website, but if you sign in with a email and a password, and it will let you drop money. I went ahead and put a little bit of money on BitTrue. I haven't traded on BitTrue yet, but I will eventually get a link. They also have an inverse swap contract. I want you guys, my few ledges, to learn how to trade on the inverse swap contracts. If you want to own Bitcoin, in my opinion, instead of using your hard-earned money that you worked for to buy Bitcoin, I would learn how to trade and use the inverse swap, because you can make more Bitcoin. You can trade yourself into owning a ton of Bitcoin, and you literally are risking zero of your money at that point. You're only risking realized gains. Does that make sense? That's why I want you guys to do it. That's why I push so hard for you to do it, because it's the safest way to, in a sense, manage your risk with Bitcoin. I mean, you can buy Bitcoin. Yeah, sure. Buy it. And if something really, really, truly bad goes down, then you lose all your money that you worked hard for. It would be much better to lose all the money that you traded for, because really and truly, then you don't have any of your money in it. Like, I have long surpassed the point of where I have any of my money in it. Where I used to buy it, like, every time we would get a bearish weekly close, I would buy a little bit. Nope, don't need to do that anymore. These inverse swap perps have really, really, really been fantastic. It's a way to mitigate your downside risk on Bitcoin, but it's an offshore exchange. So once again, I don't want you to deposit your life savings into the exchange, right? I want you to deposit what you're comfortable with losing. Like, you could take $2,000 and deposit it in there, as long as you're a profitable trader. And then you could end up turning that $2,000 into $10,000 worth of Bitcoin. And then you take $10,000 out, or $8,000 of it out, put it in cold storage, leave the $2,000 on, and start over again. Because with leverage, you can lever it up. And you're not risking your entire life savings if the exchange goes down, right? We don't know what's going to happen in the future. Nobody does. Although Bitget is doing good. I mean, since FTX's fall, Bitget has gotten a lot new customers. They become one of the top 5 exchanges in the world. BitTrue is a new exchange, but it's based in the same place, which is where KuCoin is and MEXC. They're all in Singapore, right? So it's your choice, but like I said, be smart about it. If you're smart about it, you can really, 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 really up your game to the point to where you don't have to worry about losing all of your hard-earned money. Like I know a lot of people took their life savings and bought Bitcoin at like $55,000 and $60,000. Life savings cut down to like nothing. That sucks. That sucks. I wish those people would have met me before they did that. Right? Because I would have told them, no, 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 no. Don't do that. No. This strategy works no matter what time frame you want to trade. I use it as a day trader, but you can use it as a week trader, a month trader, a quarterly trader, or a yearly trader. I made a tweet today. I want every one of you to go like it and share it because for whatever reason, I just cannot get past 4,500 subs or followers. Every time I get close to breaching it, boom, I lose a bunch. And I don't know what's up with that. I've been stuck at this number for a year. So I don't know if I said something to piss off Twitter or whatever, but remember when everybody was talking about bear market bounce? I got one right here in specifically, because he's got, I don't know if I'll be able to find it, but I thought I put it somewhere, saved it or something. Right here it is. Right there. Like this stuff right here, like wondering what the sees in the near term in terms of a recession as to why he wants to pivot so quick, always 2 steps ahead, whatever. But this was it. How I know the bear market in crypto isn't over. Look at the date. It's hard to see. I can't blow it up. January 20. How I know the bear market isn't over? The toddler bulls out there in full force. They all joined the investing in 2018 and after, have never experienced a rip your face off bear market rally. Me, been through about 100 stocks, commodities, currencies, and cryptos. And then I wrote 10 days to change his bias. It took 10 days. So from Jan 20 to Jan 30, he was no longer bearish. and little old me, little old me was telling people to buy Bitcoin at the yearly open. I literally posted it a day before. The last day in December, I am going to buy Bitcoin on the yearly open. Boom. Why? Because it's the yearly open. People need to see these tweets and stuff. They need to follow me because they're following people that are absolutely not what they claim to be. Now, Gareth Solomon, I don't know anything about him. He might be a very good trader, right? But he was late. Everybody was late. We were not. And we called the bear market top. We called the 2022 fresh yearly high short, which ended up being a phenomenal short trade. Like, we've been all over the major market turns, all over them. And it's all based on price analysis. price analysis and knowing that investors don't care about the past. They care about the future. The past is over, right? A little bit of a rant there, but I need your all's help. Share this stuff. Share it. Because people need to know. Everybody was talking about bear market bounce, and I was saying new year, new trend. Remember? Nvidia, all these things up massive from the yearly opening range. Now I see people on Twitter that never used to ever speak about the yearly opening talking about yearly openings. And I posted yearly open stuff long time ago. I did it for 2022 to prepare everybody for the bear market. I did it then too. So I'm not just new. This just ain't started, right? Where's it at? Right there. That is January the 1st, 2022. I told people to start excavating or start to sell based on the Fed changing their agenda from being 100% bullish to from being 100% dovish to doing a 180 and becoming 100% hawkish. That was definitely going to affect the markets. But I told everybody this level right here. Everybody's calling this a Wyckoff accumulation. And at Trade Talk, we were saying, nope, if it cannot find bullish strength away from this level, this will be a short. And it was a nice one. That was a retest of the yearly opening range, is all that was. It was a liquidation of everybody who got short. Because anybody that got long on that yearly open, which you shouldn't have based on the climate at the time, inflation was rising fast. It wasn't until June that you hit that inflation high of 9.1%. Inflation was going up as Bitcoin was going down. That is why I had a bearish bias there. And to be simple, once inflation started to roll over, I started to change my bias from bearish to bullish and said as long as inflation continues to go lower, then you can expect some risk assets to go higher. And investors will not wait for that 2% target. They will start investing before because it's the yearly open. That's their job. Their job is to make year over year returns for their customers. And you can't make year over year returns for your customers if you are looking at what happened last year and making trading decisions based on irrelevant data. It's irrelevant what happened back in 2008. The climate is different. The money is different. Everything is different. We look to the future here. We're futuristic. We're not looking in the past. I'm not going back and I'm not pulling up freaking patterns that were made and whenever and pasting that on this because the pattern looks the same. No, it has nothing to do with that. It's got everything to do with money markets and how they work. Thank you all for being here so much. I really appreciate it. Oh, wait, hang on. There's a couple more questions. Heath, what price would you buy BABA equity? I'm also looking at long-term 2025 leaps on that. BABA is a China company. As soon as China starts to as soon as they get everything fixed, I like it, right? But here's the fact of the matter. You have made a fresh yearly low on BABA, all right? They are literally going to break this company up. I don't know if they already have or not because I don't follow what happens in China a lot. I am not a macro analyst, and I think that's why I don't get as many followers and stuff, because people actually don't think that you can make money based on price action analysis. But price action analysis is literally killing macro investors this year anyways. So with that being said, it's making fresh yearly lows right now, and they were going to break the company up into 5 different groups or 4 different companies. So I don't know how that's going to, like, investors typically don't like when companies do that. They like when companies absorb other companies. Like when a profitable company is like consistently profitable earning season after earning season, and then they go buy another smaller company that's profitable, right? That's what investors like. So I'd say a lot of this, because it did have a nice rip to the upside at the beginning of the year. Then they started talking about, breaking BABA up. It's cheaper than it was at its all-time highs. Will it ever reach all-time highs again? I don't know, because like I said, they are fundamentally changing the company structure. All right? Now, with that being said, all-time high 316, you've literally come off what? 76% at the lows or close to the lows. It's cheaper than it has been in years. So, I mean, you haven't seen prices like this, and I don't see any splits in there. So, you haven't seen prices like this since 2016. And if you look at their earnings statements down here, they're mostly green. The company's good, but I think there's a lot of problems that's going on fundamentally with China and China companies. But I have heard a couple investors are starting to invest in some China companies. All right, because they think that they're about to be in an upswing. So yeah, I mean, find support. Take a small position at support. Right now you're breaking down, so you got to wait until support is formed. So I would have been looking to be a buyer at this level here. When price got back into it, you can see how it held for a little while. Retested what? The yearly opening range. And then boom. So people sold there. So, I mean, it's in the process of, it had a nice rally at the beginning of the year, but all that's been given back and you made fresh yearly lows. All right, so maybe it is going to bounce and they're pulling liquidity through to this low. But there's another support level that if it continues to break down below last week's low, if it continues, this would be the next area to look for a small position. 75.50. Like you said, you're looking to buy leaps on this thing. So you're looking 4 years out. Let me pull it up. Pull it up here for everybody. Yeah, TTWO is not looking so good. As you can see, we got the 135 strikes, but we're out to here. June 23rd is when this thing expires, I think. So let's go pull up BABA here and look at the leaps. This is still take 2. What the hell is going on? Thank you. I guess you're looking all the way out here. But that's not 4 years. I don't know. The calls are definitely more expensive than the puts out this far. right? You can see that the puts, to buy the puts, you're looking at $15.70. To buy a call is $24. So it does look like there is some activity here. I don't have the volume. The open interest is low. And I doubt they're sellers, to be honest with you. Why would you sell so far away? 934 days. That's December 25. December 2025. They would not be selling these. Well, nah. Well, they could be if they expect price to go up. Yeah, they could be buying calls and selling calls. That would be as long as you could get on the asset. No, you'd want to sell puts. Sorry, my mind is not working today. You'd want to sell puts if you expected it to go up, not calls. And that far out, I mean, you could see a massive range because this thing could go up. I'd say most people are buying these, in my opinion, but they're expensive. But I mean, it's far out, right? I think you're fine. I don't know which strike you're looking to buy. I would stay. How far out are you buying, dude? I'm not sure. They broke it up already. Yeah, no, I know. I got the date. I'm talking about how far out of the money are you looking? I don't like to look like, all right, so here, let's go to the yearly chart because you're literally looking at you're looking at late. So you're literally looking like Jan 26, right? So that's years out. So what we want to do is, since you're looking to buy pretty close to 2 years out, what you want to do is you want to get your last 2 years ranges, right? And then here you are. So 5801 right there. You're trading inside of last year's range. So 138.70. Can you break that high in about 2 years? If investors get back into investing, then yeah. I wouldn't do that. I would probably buy them within this year's range. The strikes. All right, the strikes. So I would probably get like 113s or 112s if it was me. You can't buy 113s or 112s. They're $5 wide, the strikes. So like the 115. And since you're buying so far out, you don't really have to worry about data, but your deltas will definitely cause those prices to go lower. So if it continues to go lower, like down to last year's low, 58, you're gonna lose a lot of money on that delta, right? Because you're going the wrong freaking way. So those calls would get really cheap. I would probably wait until you set a monthly support that is freaking held, right? Let this month close, see where it closes, because you're making fresh yearly lows. And down here is last year's low, right? That's that bullish yearly candle. That's the entire range of it. So you're trading inside of it. So, I mean, the next monthly liquidation point is all the way down there to $63. The next weekly liquidation event is $74. So if it's going to find support this month, it's going to have to do it soon. Like tomorrow's the close on the month. It doesn't have to liquidate last week's low to stop going lower here. So you might be in an area where it starts to find support, but since you're looking so far out, literally 2 months isn't going to be that hard to wait, right? You don't need you see what I'm saying? Like you can still wait a couple months. Let this thing set a support and then look to buy around that support. I wouldn't buy way out of the money calls. I would probably buy close to the money. That way you can soak up all of that. Obviously, you would make more money if you did buy out of the money calls than you got up there, but that's like a much riskier bet instead of just staying within the delta. And you would need support to be found in order for that to happen. So we'll see how it plays out. You're trading inside, and the year prior to that was a massive one. So this thing had a bad year in 2021. So before the bear market actually started for the rest of risk assets, BABA took a beating. You can make fresh yearly lows, or it did, right? Did it take out that low? No, it did not. So you can make all-time lows, but you're still a long ways from that happening. Yeah, I mean, you can. The thing that you have to worry about is the directional bias. And right now it doesn't look so great. But you're getting ready to come to the 6-month point. So you could find support soon, like this month or next month. You can find support. And if you do a retest of that support, I'd probably buy at the money. And then you got plenty of time to hold on to them. You're literally looking out to here. All right? That's a long ways. It's a long ways. And you'll get the intrinsic value of being in the money. If you buy at the money, for instance, and it starts to go up, then you will be immediately in the money. So those calls will have intrinsic value no matter what happens, as long as you keep trading above the price that you bought them at. Whereas when you buy out of the money calls, you can make more money, but the asset literally has to get there. And it is on a downswing right now. It's bearish on the year. It's bearish on the quarter. You took out last quarter's low and you're at quarterly support. So let's see. Let's see if the month can close up above 79.99. That would be great. And you got next month could potentially pull back up to the yearly open. You got a month before this quarter closes. So that tomorrow's close isn't going to be so important on the quarterly price. But that's support. It's not the lowest quarterly support. The lowest quarterly support is $58. So yeah, I mean, it's coming off a nasty, nasty move lower. It's cheap. So yeah, it's gonna be if they as long as they stay profitable, then I would expect people will start to the China reopen hasn't gone as the way people expected it to. Let's just say that. But eventually they'll turn it around. All right. 85 or 90. Yeah, close to the money. Close to the money. That way, once it starts to go the opposite direction, like I said, you will be in the money intrinsically. And being in the money intrinsically is always better than being out of the money. Take two, for instance. If we go to the daily, you can see here it's not working out so far. So each day we get closer and closer and closer to this expiration. which is June 9th. The closer it gets to that expiration, the less and less value that put will retain next week. So they're already almost, they were at what, 185? So you can see how they're at 110. So you've already lost 70 cents on the premium. But it could still come back. It's just the closer and closer it gets to expiration, you're going to start losing more and more time value. As of right now, the in the money is 139s. It's just barely profitable from at the price you purchased them. So I like buying far out better than I do close. But there was a reason why I was talking about that trade, and it was the fact that it gapped up so big on bad earnings. But as long as resistance is holding, and so far it is, daily res, I will be happy. And I will hold it. So you tested the daily resistance today, and you got a downswing from that. Right here. Boom. You opened above daily resistance and instantly dropped. All right? So that's what we want to see. We want to see this thing roll over before expiration. And we might be able to salvage something. A breakdown would be fantastic, as that could also cause implied volatility to raise and then make the premium worth more money. All right, we're going to end it with that. Thank you guys so much for being here. Y'all have a fantastic rest of your day. We'll do this again Thursday morning. We'll see you same time. Yep. Not much else going on this week. Just keep your levels. Make sure you're watching them and you know what to watch. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.